Welcome back to the 1 hour you need in the market to make you money, Market Mastery, with myself and Stock Savvy Shy, getting it in, putting in the work so that you don't have to, with the best trades that have made the most money over the last year. A few notable mentions: the early entry on Tesla, Palantir, IonQ, Nvidia. Basically any big trade you saw, we sniped, and we're going to continue delivering for you guys. But before we get started on the SPY today with your two options trades for the week, so that whether it's bull or bear, you make money, let's give a nice golf clap for my good man here and his appearance on Fox Business. Nailed it. You did nail it, though. I wasn't kidding. I'm sure you could tell by the
Really?
text. Dude, literally perfection. There wasn't a single moment of like,
Oh, nice.
You did way fewer ums and ahs than you do when we're talking. So a little offended, but whatever. No, seriously though, you nailed it, dude. Like, it was just absolute perfection. You added like a succinct answer for every question. You didn't go on. You stopped. Like, I'm telling you, I don't think you could have done better. I mean that genuinely.
Good.
I think it hit a 99 of 100.
I appreciate that. I mean, I was a little nervous because you guys all are aware I can go on a rant. I can fill silence. I don't do silence. Silence is deafening. And the instructions for that interview was very vague. So I had no idea what I was going to talk about. It was AI, quantum, robotics. I think we maybe talked about AI and a little about quantum. Didn't even cover robotics. And I thought I was going to talk like 10 names. I only got 2 in. So it was definitely a fun experience. I let the EPs of that show know, like, I would love to come back. It's 10 minutes away from my home, the LA studio. So very easy. And let's hope it happens.
Yeah, I mean, that would be huge. So you're not close to the fires, are you?
I was less than 2 miles away, the Hollywood Hills one.
Oh, shit.
I'm in LA. It definitely slowed down a bit. It still smells a little wonky, but I'm an LA boy. I grew up here my whole life. I grew up with fires. It's a weird thing to say, but like, if you guys are aware, like, I grew up in Calabasas area. There's a lot of mountains around that area that growing up, all I did was smell fire. Like, it was a weird nostalgia. Whenever I smell fire in the air, it's like nostalgia for me. It's so messed up, but it is because I grew up with it. So I was part of the area where I had to evacuate, so I had to do that. My fiance is a bit of an alarmist because she's not from the area. I was very level-headed. But yeah, everything's back to normal-ish, but it's crazy times in LA. I mean, everyone's on edge because nobody knows when the wind's going to pick up again and who's going to be next area to like hit that fire. Like, it's crazy times.
Yeah, well, either way, I'm glad you're all right. That was one thing I was thinking about. I was like, shit, I hope he's nowhere near all that business. So, all right, beautiful. Let's get started. Let's get you into the SPY. Let's get you loaded up. As always, we have been delivering on these picks. Our analysis has been thoughtful and thorough, nailing every week, giving you a bullish and bearish trade on the SPY every time. And this last week was no different. We talked about a potential test of 570. We talked about opening up those 575 puts. Those hit just at the money, which offered you a significant profit. It should have been near 100% if you took that trade from our analysis. I'm very, very much so glad that we got that out before this little sell-off here. So looking a little more deeply at this chart, I took a lot of the drawings off because I want you guys to get a better idea of kind of what we're looking at in the moment and how we define these ranges so that you guys can have a better understanding of how to read these charts. So just looking at this right here, I'll tell you right now, that's very interesting. So 589, 590, it also looks like where we topped off there. And then as far as the bottom goes, I mean, we're really just working with what we got here at 575. I still think there's more downside, 570. Right there, that's kind of like this is more of a major range because it also includes the gap fill. So I'd say I'd be very comfortable with that 569, 570. So as you can see, we're trading through it pretty well. When we break above it, we go up. When we break into this range, we stay in the range until we break below it. So that being said, with what we have right now, we're in no man's land in purgatory. What do? That's a problem. We don't want to take trades in purgatory. We don't want to get beat to death, especially trading options. So what we're going to do is this is a little bit of a watch and wait this week. I'd say, like, to be a little more careful than most because there is a lot of uncertainty. But I think if you saw the title of this video, I think there's a strong argument for this kind of bottoming out here shortly even if it means coming down to 570 and then loading in. I don't see us seeing any sort of capitulation in the next couple weeks. I think that they're just kind of front loading Trump with a shitty situation. And this feels a lot more like manipulation than anything else, just between us girls here. So looking at this, the way it's playing out now, I would love to see like a nice, easy open above 580. And if so, we can trade to 589 because it's a significant move. But we're going to target 585 rather than 589 because if we get the move up, we'll be in the money. And then if we continue to 589, we'll be $5 in the money, which means those contracts will shoot up in value. So we're going to go a few weeks out. As always, we want to do 2 to 3 weeks of expiration on these. These trades are good for the whole week. The point of this is to set you guys up with a set of trades that will continue to pay you throughout the week. So going to the SPY options chain here, and we will write these in the chat. If you want to trade these live with us and you want more recurring updates on this stuff, I'm going to put the link right there. You could just scan this QR code, or you can just screenshot this, scan it later. If you're on your desktop, just scan it right now with your phone. That's how you get access to the daily updates on the trades, the live trades, and everything in between. So for the SPY for us for this week, again, we're going to be targeting 585. Let's look at expiration here. I like going a little shorter term this week, January 27 to keep the cost down. So if we're looking at the January 27th, 585 calls, as we're trading at about $500. Applied volatility is about 2% higher than I'd like it to be. If you'd like to lower the cost, you can look at the 590s. They're trading for about $360. But for the sake of simplicity, let's focus on the 585 calls. What we want to see in the market is a soft open, trading neutral, 580, 581. This would be the loading bay. This is where we'd load up on these. There we go. Porterhouse just put the link in the chat. Go click this link. I update this chart for you guys and we publish it so you have all these levels mapped out for you. It's not something you have to worry about ever again. It's already done for you. So we want to see a neutral open where we load these up. If we break below and we can't hold 580, I'm going to exit these. I'm done. The calls are dead. Roll out. Be done. But opens neutral, pushes up. We should get a little resistance, 584. Feel free to sell then, 20, 30% profit. Or you can hold through the targets and maybe we see 589. Potential test, honestly, gap fill right here. You got a nice little gap right there to fill up to 595 if we get a strong bullish move. So that's your bullish trade. I think that's a pretty likely scenario that could occur here, but we're going to now give you your bearish trade really quick. And then when I wrap that up, I'd love for you guys to get a little macro from Shy on what he sees in the next couple weeks. So our bearish scenario is very similar. You've got the same level. It's like 580 or so. If we get a 15-minute chart, okay, we're on the 15-minute chart. If we get a push up and then a sell down and then we get confirmation right here, I'm going to enter the same expiration, January 27th, except instead I'm going to look at the ones I broke down for you Friday. I want to look at the 570 puts. So we're going to go a little further out on that. It was still $5 move. 570 puts, $10 move, excuse me. So the 570 puts for January 27th, if we get that confirmation below 580, I think we're going to go down and test 570. And that trade will pay off over 100%. Again, if you want daily updates and you want the live stream, the live access to these trades, we'll be trading them live almost every morning. Scan the QR code there, or you could just go to, I realize I should probably type it too. Nope, just the WAP storefront. It's in our link in the Twitter bio. So if you're confused, just go there. But we are trading these live and actively updating them. So if you want a little more hands-on, that's how you get it. So those are your two trades, the 585 call and then the 570 puts, both for January 27th expiration. I gave you the levels I'm going to be watching when these break out so that you know exactly when it's time to jump in and when it's time to walk away. And that's pretty much it. Shai, what are your thoughts? What are you seeing on sentiment right now in the markets overall as far as S&P is concerned?
So regarding just the S&P by itself, I do want to say the rhetoric I was preaching throughout the month of December was January will be bloody, and it's going to be a healthy type of blood. It's going to be a correction and a secular bull market rally. It's not going to transfer from bull to bear market rally, bull market to bear market. That's not occurring right now. This is purely just a slight correction, a repositioning from the 2024 winners, which is large cap tech, semiconductors, which are heavy weight of the indices, towards defense, healthcare, lagging small cap, mid cap growth, software. So like, I think this is really healthy. I will say the end of last week when I was doing my right up to the subscribers of the weekend, like I was somewhat squeamish on SPY because we were violating a key level that's been the buying, been the support since the October 2023 breakout. That 21-week EMA on the SPY, every single time since October 2023, excluding the yen carry trade crisis, because that was a different animal itself, but we did V-shape really quickly above it. But since then, past 15 months, every time it touched that level, we've bounced every single time, and not just like a slow bounce, V-shaped to new highs. Last Friday was the first time we closed below it with volume on nothing other than a stubborn 10-year yield. I'm like, oof, that's something that we're going to have some kind of macro data to correct. And if we don't in the meantime, which I don't think we have except for CPI this week, which was going to be a couple of days, like, oof, this could be a pretty bad sell-off. But the close, like the way we closed today, relieved that heartburn for me. We closed at the high of the day with velocity the past 30 minutes. We've closed above the 580 level, which was the key level for me to feel comfortable in the market and not get defensive. And as long as we maintain that, I think we're in the clear. But if we do violate the 580 level, there's a magnet to 560. It's just a quick magnet, and it's going to be a flush. And that's when you load the boats. I don't think we're going to be in a bear market. I think any kind of major dip like that is a buying opportunity. I think that's the way I'm treating it. So I think we're fine. This is a small correction. There's ways to play it. Again, when the VIX is at a 14, 13, that's when you hedge. Hedging is cheap then. We say it all the time. I bought some June expiration puts on the SPY when the VIX was at 13, mainly because volatility is cheap and hedging is cheap. I think VIX is going to hit 20 and above in a Trump-led presidency the first quarter of this year. It happened within the first week. And now the VIX going from 13 to 20, that alone is a 40% increase in premium on my contract, even if the stock doesn't go anywhere. That's what the underlying Greek means. Like I won't get into it too much, but either way, as a profitable trade if you track the VIX as a tool for your decision making. But I do think this is, in this correction, we are closer to the bottom than that we are at the top, and I think the risk and reward is benefiting the longs here.
I would agree. 100%. So I think going forward, guys, the key here is just understanding that we have in no way, I think, made any sort of directional move that would predict what the next couple weeks are going to look like. You have a huge catalyst in that, or I guess variable in that, Trump's going to be named and it's going to shake things up. It's kind of like a reinvigoration of the traumatic experience for most. So I think right now, really, it's just setting yourself up for success in the short term while we watch the long term play out until we have a very clear direction. And this is exactly how you do it with these trades. So I'm glad you guys shout out Rick. Thanks for the shout out, my friend. I'm glad you guys are making money on these. That's the whole point. If you guys aren't making money on these, what is the point? So let's continue forward. We got to talk about it. We got to talk about it right now. Short report came out stating that TMDX is not real. It's complete nonsense, that it never has existed. It's just been some very creative accounting and amongst other things. I did not read the 30-page report at length. I don't know how much of it you read.
I think it's 300 pages,
yeah,
which is even more ridiculous.
I'm sure it pissed you off for every second. So, keep in mind, guys, there is a strategic interest in releasing these kind of reports. You take a short position on some real, like let's say we were trading at 166. Let's just say hypothetically, it made sense to short this down to 100, right? Just based on fundamental value, maybe a little too much hype in the market. Let's just say that was a reasonable trade. Then they realize we can get more blood here. And so they write like these just nonsensical things. What's your read on that?
Well, first off, I don't think many people realize they doubled down today on their short reports. So that's why it was down at 15% at one point today. But Regarding the short reports, I do want to say before this release, the short report, I think the shorts on the stock was in the mid 20% range, 24, 25. I think it ballooned up to 28 to 30% maybe after this report came out. I could be very biased, but I thought that was one of the most bullshit reports I've seen in quite some time. I think some of the commentary that they made was like an example. I believe they're like the organ utilization rate exceeding 95%, and the OCS, which is, if you guys aren't aware, it's the device that redefines like they're claiming that redefines organ preservation by keeping the organs in near psychological, physiological state for up to 24 hours, which is a game changer. It used to be only a couple hours, and the ice bucket was like the biggest competitor for quite some time. But either way, the OCS is backed on years of clinical trials, regulatory approvals, and backed by years of real world success stories. So to claim that this device, the efficacy of this device was overstated, borders on how absurd. It borders on the absurd. Like, are we to believe that the FDA, the leading transplant centers, and countless medical professionals out there have been collectively like having a group chat on Telegram or WhatsApp to dupe everyone for years? No. Like, such a notion strains like credibility to this breaking point. Like, it just doesn't make sense. And I'd respect the short report much more if they didn't put a $0 price target, because essentially by placing a $0 price target on the stock, you're saying it's a complete fraud. It's an Enron 2.0. Everyone who's been validating the stock, again, like I said, the transplant centers, the FDA, and all the medical professionals are all wrong and working together to...
Everybody's in on it. Everybody.
That's freaking nuts. Absolutely nuts. And among the accusation, the one that stands out somewhat plausible, I want to say, is yes, the cost is significant. I do think while lead and management on Transmedics needs to be more transparent on, it isn't the cheapest solution. I think they're being misquoted where $80,000 per organ is a significant sum, but you have to weigh that against the cost savings and improved outcomes delivered by the OCS long term. Like, the figure will become much less shocking if you prolong it for the longevity of a life cycle for an individual. I think that's kind of where while lead and management's like they're trying to get at, but they're being misquoted that it's the most cost-effective solution, where it's not immediately, but prolonged for the life cycle. It absolutely is. And there's also, I won't get into it too much, but there's just so many allegations in that report. Like, I think some were like off-label use, kickback to healthcare providers.
I just love that they use the word cartel style or cartel-esque.
I'm not exaggerating. They were referencing Squid Games in real life. That's what Transmedics is. If you guys watching, like, if you guys watch that show, like, there's a certain element of Squid Games where they harvest all the organs and sell in the black market. They're claiming that's what TMDX is doing in real life. It's just absurd. I do agree that they're capitalizing on narrative false price action. The stock is getting destroyed due to competitive headwinds, fleet management costs that affect their margins. NRP is gaining somewhat of popularity as a short-term band-aid. It won't be a long-term competitive competition, but the perfect storm that was brewing in TMDX second half of last year, Scorpion just capitalized on it. Ridiculous narrative. And it was just so absurd that I clearly did not give it the whole read because it didn't deserve my time, but it's going to feed into the FUD. And the fact that they doubled down today is just ridiculous. And I think this is like, again, the stock, unfortunately, won't recover from this in the next couple months, in my opinion, or a couple weeks. It's going to take some time. Management is actually speaking at the JP Morgan Healthcare Conference right now, which is the biggest healthcare conference of the year. I think it's at 2:15 my time. So we'll see if it recovers. But either way, like, this is one of those stories where the narrative won't change until we see their earnings. And even then, it's going to be a volatile one. And this is definitely the most polarizing position that I own my portfolio. I think I'm right long term, but I have to manage my risk. Like, even though I thought that was a absolute bullshit report, I'm not going to be aggressive with my ads because I think they actually have an absolute narrative issue and those kind of a narrative issue on a stock takes months, not weeks to get over. Sometimes a year, 2 years. So long term, I think we're in the clear. If you got it in below $60, I think you'll do significant, significant. And I think the M&A we just got on, I forgot, I'm blanking. A Striker acquired someone 2 weeks ago. Blanking on the name. That provided a benchmark valuation on what an M&A, like the multiple will be for any kind of medical device acquisition. And that price Transmedics at $200 plus. So I think it's a very compressed stock. But I think 2025, for me, I'm being super aggressive with my software names. So I think right now we're at the stage we're at in AI. I believe it's the software's time to shine. And in that spotlight, there's going to be some 300, 400% moves, in my opinion, in software next 18, 24 months. So I'm allocating my DCA towards that while still maintaining my TMDX DCA, but like really it's lower on the list because I want to prioritize software. And right now I have an 8% TMDX position. So I don't feel the urgency to have to increase it because it's already a decent chunk. And my average cost is $67. So I'm obviously underwater, but I just they have a narrative problem that I can't help. I just don't see them fixing until they report their earnings. And it might just take two earnings report for them to do so.
Yeah. I just think that somebody was just asking me about this show. Sorry to send the message. But yeah, I think that just kind of what he's saying, too long didn't read, and to throw in the chart accordance here, like it's an uphill battle at this moment. So just keep that in mind. When sentiment is incredibly negative, even if it's total bullshit, maybe it turns out this whole short report, every single bit of it was made up. There is rarely ever any kind of at least in my experience, I've not seen these kind of people held accountable. It's crazy to me that they can kind of just say whatever the hell they want. But nevertheless, it is what it is. So we did. I mean, I'm not gonna lie. Today was impressive. Like new swing low, not great. Like we have a relative low, but buyers pushed it back up, and I like
go to the month. Go to the month. Remember, we brought this chart up last week. This is the one indicator to watch out for TMDX. The 50 SMA on the monthly chart. It has bounced there perfectly every time it's had an oversold nature. And that level right now is at $61. It's still maintained that. Even this morning, it was a swing. Like once that Scorpion doubled down
50
on
day?
The 50 SMA on the monthly chart.
Yeah. So there it is, guys. So just to here, let's get rid of the other ones so you could just see it.
Yeah, make it extra thick too. But
we're gonna make it white.
Perfect.
There you go. You guys can see that. Yep. So it's this line right here.
And that's at 61. So like when this morning, when it flushed down to 59, I think it was, this could get ugly and could really, like, I don't know, go to the mid 40s, maybe even like low 50s, but mid 40s most likely. Mm-hmm. We had a strong intraday swing. Like it's showing signs of a bottom in that level, and that's great to see. But I think this is so violently undervalued that I believe it's $100 plus, like, easily once the narrative changes and short interest goes lower and lower. But there's nothing I or themselves can do until they have 6 months of like proof on it's all FUD and things are going great.
Yeah, I would be a huge buyer at 40. I'll just throw that out there right now. That's like a load the boat situation.
Yeah.
And realistically, that's the next key level. But the volume here is so strong, we shouldn't see that at all. Stocks play did go bear, but that can flip at a moment's notice. So just keep a close eye on those levels, guys. You can put that 50 SMA on your chart. Again, we could publish these charts so you can look at it exactly as we have it written out. Just make sure to follow the account on Trading View. I think it's just Penny Boys. Yeah, one word. But to Recycles Bintex point, like that would be beautiful. Like keep in mind when you do get a short report like that, and you do get that covenant of short sellers, which are kind of just like the worst people in the market. It's like they suck. You can get squeeze opportunity if TMDX comes correct with some fundamental backed data. Wouldn't you say that? Like if they somehow find a way to knock back hard on good earnings, good data, good guidance, this thing could go apeshit.
I think the narrative is they're losing market share to NRP. That's what's causing this FUD narrative. And if you guys have dug in to like my research, and I communicated that like NRP is a band-aid, like absolute band-aid for these medical transplant centers. Like it's not a long-term solution. It's cheaper, but it's immoral, and it's only part of the use cases in general in this $23 billion market that TMDX is a monopoly in. But I do think that it's one of those things where like until market share improves, doesn't matter what the flight data shows, because flight data right now is showing, whoa, things are going incredible for TMDX. The market share that we saw last earnings report was troubling due to NRP's popularity. That's the one thing that they have to solve, and have to flip that narrative. Until that happens, this might not go anywhere. And I do think that it's fine. Like I see this one comment: "Why are shy stocks chaotic?" LOL. Like holy hell. I mean, it's been a crazy past 12 months. You guys are aware, like CrowdStrike, Snowflake. I mean, the list goes on. Like,
they've gone wild to the upside, though. I'll just tell you, more than not.
Well, that's part of the course. Like I'm glad he brought that up. Like that is part of the course of being a growth investor. It's not as easy as just buying indices or big tech. There's fluctuations. Volatility is a toll you have to pay to be early in a secular growth shift. That is what like everything I'm going through is because these firms are going through a secular shift in an some early growth thematic. That's not going to be smooth sailings. It's not. It doesn't matter. Like it really isn't ever the case. Even Amazon at one point, when they're disrupting during the .com era, when they built an online marketplace on top of the structural artery of the internet, which was the connectivity that IBM, Verizon, Cisco, AT&T built, people doubted online marketplaces if they're actually going to be the future. They thought it was way too like far-fetched, that people wanted to like feel the things they're buying. They wanted to experience in person. Nobody believed online marketplaces would take off, especially eBay as well. Things changed. Applications are the accelerators once the infrastructure is put in place and early moves. The reason this is not about TMDX morally, it's more about AI. It's like the reason like Rocco, I made that comment because CrowdStrike and Snowflake, those are more AI and software, and like they experience the turbulence. Palantir, that things were not easy in 2023 as Palantir. Like I got in way early at Palantir at $8. It was not easy. I had to have stomach to build an overweight position in that because I felt like I was going crazy on. I understand the Palantir product. Why is everyone calling this a black box? Am I missing something? That's just part of the course. So I think that I think maybe I'm one of the few growth investors out there that are so public and transparent. So like it feels like it's always my stocks that are volatile, but I promise you guys, it's not the case. It's part of the journey of being a growth investor.
But remember what the riches are on the other side of that as well.
Yeah.
Volatility cuts both ways, baby. So let's keep it moving here. Again, I put the link on the screen. He writes his emails a few times a week. So if you want all like the latest up-to-date information on these names and the next opportunity that's going to come up, make sure you scan this code right now, or you can grab the link in his bio at Stock Savvy Shy on X. I would recommend doing that if you haven't yet. It is honestly, it's one of the only email newsletters I even read. So there you have it. Let's keep it moving then. We got a few other names I know everyone is wondering about. We're going to do a quick run through on Tesla. As far as the narrative, nothing has changed. Even as far as the chart, the monthly still holds strong as a champion could in a chaotic market, in a chaotic beginning of January. This monthly chart is still locked and loaded. I'm not concerned. I'm not worried. Again, this key level is 382. Let's hold that. If we hold that, we are golden, absolutely golden. Buyers have shown that this is undervalued. The narrative is continuing, and I don't think anything is going to slow them down. And for those of you that are chart purists, RSI hasn't even gone that overbought yet. And I don't think it's going to until we go 450, 480, maybe even 500, with our long-term target being right there, 607. So keep that in mind if you're long and strong Tesla. I'm going to keep it moving. Palantir, our first sight of bearish price action. As I said last time we streamed, below 69, get ready to load up when we get the true dip, because I really think we could cut this move in half and maybe see the 50s for a while. This thing is incredibly overbought, like more than almost anything I've ever seen outside of GameStop and AME. This thing went nuts. So I don't know if you have any color you want to add to that.
It's just really not comical. It's just like everyone wants the mover to pull back and then they buy. Palantir is 20% off its high. Nobody wants to buy it, but they wanted it when it was like FOMOing. I think it's the worst kept secret in the world that Palantir's valuation is absurd. Valuation, again, this is like one of the topics I talked about with Charles actually on Fox Business. Valuation takes a back seat to my approach on finding disruptors. I'm only worried about market share and competitive moats in a secular growth theme across the next decade. Fundamentals will catch up to it if I'm correct on that they have pricing power due to their moat. And some of the characteristics I look in a moat are a sticky ecosystem that takes years to migrate out of. Palantir has that check. Unique logistics network. Palantir doesn't have that, but the Amazon, Mercado Libre, Transmedics has that. Customer loyalty. Palantir absolutely has that. Can their product scale? Oh, fucking yes, Palantir has that. So 3 of the 4 moats that I identify, characteristics that I look for to identify a impenetrable moat, Palantir has that. And logistics network, like they're not supposed to have that as a software company. So I count that as 3 for 3. I think Palantir has cemented themselves as the stage 2 AI winner, and nobody knows the ceiling on AI. It's just beginning. The baton just got transferred from stage 1 infrastructure to stage 2 applications. And like I mentioned before, applications are always the accelerator for any kind of revolution. You saw it when .com era. It was all about the infrastructure. Like I mentioned, IBM, Verizon, AT&T, Cisco. Essential work, absolutely. But they weren't the crown jewels of that era. The crown jewels of that era was the Amazons, the Googles, like the applications that were built on top of the connectivity. The same thing is going to happen for AI. It's all about the GPUs, hardware, servers, computes. These hardware firms have been getting the spotlight since 2023, 2024. Again, essential work. They're building out they're laying the groundwork of AI before the applications, the accelerators are going to capitalize off that. That transition is occurring. It occurred. Last earnings cycle, it happened. So now is the time to capitalize on software, in my opinion, because the baton has been officially transferred over. And this stage of AI has something the first stage of AI didn't have: permanence. And what do I mean by that? There's a recurring revenue nature associated with software that and once you capitalize on AI and you prove you will be in a stage 2 AI winner or post AI winner, enterprise AI winner, whatever it might be. If you prove that you belong in that modern tech stack, the market will assign a premium valuation to you. We saw what a re-rating could occur on a narrative change. Palantir in 2023 versus Palantir now. That stock 10x. Fundamentals improved, but not 10x wise. The narrative improved. They cemented themselves. Stage 2 AI winner. There's going to be a couple. Tesla, the same thing. Tesla went from EV to now they're going to be the real world AI winner via autonomy. Those 2 names, Palantir and Tesla, they've cemented themselves. They're getting cozy as the stage 2 AI winners. There's going to be a handful of names that will join them, in my opinion, in the next 18 months. And I think you have to be very specific about which companies you want exposure in for the second stage, because it's going to be one of those situations like, hear me out on this. Hear this quote. People are going to say I'm an idiot, or maybe early on it, but I'm very adamant that this next stage of AI is going to feel like a lot of software names. Dozens of software names will benefit from AI and will be here to thrive and survive long term. It's going to be the one situation where a high tide raises all boats, aka software, before the tsunami hits. And it's going to cannibalize the whole space. Almost all the space, not the whole space, almost all the space. There's going to be a handful of winners, but there's going to be a whole lot of losers. But those handful of winners will have unprecedented pricing power. The market's assigned a stupid premium valuation, and they're going to be thriving. Palantir and Tesla are 2 of them. You guys already know. Oh, if you guys don't know, like my newsletter, I send it all the time, like what I'm bullish on, and like you can see on my subscription. But like I'm setting myself up for primarily software this year, and I think there's going to be 3 more names are they going to join this Palantir and Tesla in that stage 2 AI list. And that re-rating is going to be explosive for those 3 or 4 software names that I'm putting in that bucket. So I wanted to allocate that. I mean, restate that to you guys, because don't be fooled in 2025 when you see so many software names benefiting off of it, thinking AI is doing great work for everyone. That's not going to be the case. Like, I don't know when it's going to occur, but agentic AI is an absolute real fear. And you heard from from NVIDIA last week. You're seeing a lot more commentary on agentic AI. It's real. Like, it really is a really big headwind for the space. But either way, I do think Palantir, this pullback, like, I wouldn't add, just because I'm way overweight, under $10, and it was a 10 extra at one point for me. Wow. And it's already a top 3 position for me. I don't feel the urgency to get in, but if you guys don't have exposure in Palantir right now, like, you have to be very picky and choosy on how to get it, because I think it's one of those names where if you want AI exposure, it is so difficult to not have Palantir and Tesla. Like, it doesn't make sense to say like you want that AI exposure in portfolio and not own Palantir and Tesla. Is really
you don't have the AI exposure. Then I don't know what you're doing.
It's weird.
You're the best application of that exposure, and honestly, 2 of the bigger beneficiaries of it. Because that's the thing, guys. Someone could be instrumental in it, but this stuff's all driven so much by it's people's thoughts, beliefs, intentions. People control the market, and I know it may not feel like that at times, but you've seen it with the unprecedented Tesla pumps when there was really no reason to pump it at those times. They believe. And I think with these names, there's been a belief and a community that's formed around them that will continue to drive them up, which then offers them bigger and bigger opportunities to capitalize, which they're already good at, on those market segments. Don't you think? I mean, if your valuation's always boosted, right? Cash is never going to be a problem. So you're almost getting a monopolistic view of each market, because if your valuation's climbing and your shareholder base is climbing, banks are going to be more friendly. Everyone's going to be more friendly. So when you want to roll out and scale in a totally new segment of the business that leverages what you've already built, everyone's going to say yes and sign up for it. So I think it's like this social sentiment deal with the market now is setting up the few to have all the opportunity. All of it.
Legit, the world is the TAM for Palantir and Tesla. Like, enterprise, commercial scale, every company in the world, that, I'm not exaggerating, like, that is potential customers for Palantir. Every consumer in the world and enterprises is a customer for Tesla's autonomy. Like, it's more consumers, but I was referencing robotics for the enterprises. But for consumers, all consumers are the TAM for essentially Tesla. Like, that TAM is, it's not billions, like, it's trillions. Like, it's insane. It really is insane. Like, Palantir will eventually, I don't know how long, but they're going to be involved in that conversation of like the Mag 7. Like, they're going to be $1 trillion company, in my opinion. Like, I don't know when that's going to occur. Be 2040, for example. Like, I don't know. I really don't know when, but I'm confident that eventually they will be. And I'm not selling my shares knowing that, like, what, they're worth 150 billion now. I think they can 6, 7x, and I don't know when, but like, they're going to eventually. And I'm just going to sit pretty and like allocate my funds elsewhere, confident where I don't have to worry about the stock valuation. Like, yes, nosebleed, fine. That's a secondary effect in my decision making right now, because I want to find those names who will not just survive but thrive. So, speaking on, like, should we go over the other stocks? Like, I think we did a good job on. Let's go over IonQ, Quantum. I get this name all the time as well. So Quantum, what is happening with Quantum? What was one of the comments I made earlier in the show? Volatility is the toll you have to pay to be early in a secular growth theme. Quantum is so early. Again, like, let's just say this is this tech revolution we're in is a baseball game. Right now, AI is in the 3rd inning. They're still going through the first order of batting order. Quantum, they're stretching before they do batting practice. Like, we're way early in that. But referencing what Jensen was saying, I think it was last week at the CES, that spooked the whole entire not industry bucket of like 5 quantum names. Like, they're down 50-60%, I think, since then. And the comment was, Jensen believes that quantum's 15, 20, 30 years away. Maybe I'm in the minority in this, but I think he was absolutely misquoted with what he was referencing. I think he was saying the general application of quantum is 15, 20, 30 years away. And I believe that's factual. I think Austin's not going to buy a quantum computer next 5-10 years. I'm not going to be able to buy one. It's not going to be cost effective. It's stupid expensive. Yes, so the ChatGPT or consumer moment for quantum is decades away. But people took that comment and said, "Oh, there's no real world use cases right now. It's actually decades away."
Like, from a commercial scale is like it's happening. It's not.
It's happening.
It's happening.
It's proof of it. IonQ, it's happening right now with AWS, Azure. It's occurring right now. So like, it's and also like the IonQ is on a pathway to make $1 billion in 5 years and hit profitability in 3 years. 70% top line CAGR.
Yeah,
and this is a $1 trillion TAM, multi-trillion-dollar TAM, and quantum computing. And we're talking about first mover and leader like IonQ being worth $10 billion when they're about to make $1 billion in 5 years. Like they're going to have a crazy premium, especially when profitability occurs when they're going to the top line 70%. And they're already having real world use cases right now. And their trapped ion technology, in my opinion, is the most precise and scalable approach to quantum computing out there at all. Rigetti is a very interesting, I agree. Rigetti is a great 1B, but it's not at the stage of maturity or stage of like their deal flow fundamentals as IonQ is. So I think IonQ is the best pure play. And if you're grandpa, you love Honeywell and you love IWM. If you're a papa or mama bear, you're going to love NVIDIA, because NVIDIA is going to be the cornerstone of quantum computing as well. A lot of people don't realize this, but you have their CUDA platform. Developers are utilizing that to simulate algorithms, quantum algorithms on their GPUs. Yeah, on their GPUs before deploying them to the physical QPUs for cost-effective and more efficiency. It's happening right now. NVIDIA is partnering up with IonQ already. So like, it's such a false illusion. I think that whole sector was very frothy and needed maybe a gut check or a rug pull because things were moving way too quickly. But it's a I think those are some misquote in my opinion. A long-winded way of saying Jensen got misquoted. Quantum is absolutely here. It's happening right now. But commercially, you're right. It might not happen for consumers, but I don't care. I'm all about enterprises right now for IonQ. Like I could care less if consumers adopt it. Like that's more of an Apple thing. Like it's more of a consumer ecosystem thing where right now all IonQ is focusing on is building the quantum internet of the future through the partnerships. And I think the trapped ion technology is by itself the best pure play.
Yeah, and guys, like, just keep that in mind. Like, what we're saying here is, like, he was misquoted in that, like, it's like we're nowhere near the application, right? It's kind of like saying, like, hey, I want you to make this thing for me, and it's like, hey, we can make it for you in a few years, but we're already making it it's already being used in what we're doing with you commercially, and has been for a little while now. So, I mean, all of the true revenue generation opportunity that's going to kind of starting here. So if you're looking at this as what am I going to invest my money in? Where's it going to see the most growth? Here. You may not see it in your everyday shopping trip to Target at this moment, but trust us when we tell you it's already in play. Even from a standpoint of like using these models to do consumer segmentation based on like they're starting to do it based on your outfit. Like materially, they can scan and determine what you've already bought to then hopefully guide you towards more things that you're going to buy. It's been happening online for a long time. Now imagine that at a 1 billion X scale where it can compute so much, an amount of information that is unfathomable. None of us we can't, if anyone's ever heard the argument or the example, excuse me, of what is $1 billion? Like, what is it, right? And I just saw something this guy posted that was interesting, that if you had $1 million spending habit a day for like 50 years, you wouldn't even scratch the surface on spending $1 billion. That's crazy to me. Crazy. None of us, I mean, there might be some here who spend $1 million in a day on bullshit. I don't know. Not me. But to think about how to do that for 50 years every day, knowing you wouldn't even scratch the surface on $1 billion is the argument of like computing as it stands now. Pretty impressive. Quantum. So the world is here. Like for the most part, we're lucky that we started the show and our community when we did, because I think in a matter of 2 or 3 years, every most popular like streamer or influencer you see will be AI generated. I would argue that 75% of the ones you see will be AI generated. So, yeah, I don't know.
I mean,
it's hard, dude. Google's there, man. I mean, it's not implemented perfectly yet, but I found a few accounts. Me and Pookie were going through a few accounts on X today. 100%. This is a dude who created a super hot AI chick and just supplanted a new face on existing imagery from a popular influencer account and is using it and growing it. 100%. 100%. So it's already happening.
TMDX is up 8% after hours, while lead CEO just said that they're going to be growing 75 to 80% year-over-year growth. So essentially saying Q4 is going to come in above estimates.
Oh, come on now.
It's at $70 now.
So again, well, what did we just say, you guys? So, if there's a fundamental valuation argument made that is compelling, this thing is, I guess, just going to go nuts. Dylan. Shout out Dylan.
Oh shit! There's 8,000 people here. Nice.
Yeah, we're cruising.
Right so let me make some comments. I do want to make some commentary on agentic AI though. Let me read. I'm reading for this conference.
And while he's doing that, start loading up your tickers for Smash or Pass. Drop a ticker in the chat, whichever one you want to talk about. We'll take a quick look as soon as we can. Go ahead.
Yeah, so when he was it's running. It's $70 now. Jeez, let's go. AI is going to change everything. It's going to. I'm sorry. It's going to affect a lot of people, and it's going to cause there's so many ways to capitalize on AI that a lot of people aren't envisioning right now. Like I'm going to be treating like, here, put my Austin, put my newsletter thing, my scanner over here up on there. So this is something I'm going to try to highlight throughout the rest of the year, because I think people are not confused, but like they're underrating how applicable AI is going to be across so many different industries. It's a perfect example of an early secular shift that will affect multiple industries. E-commerce, for example. Let's just do the e-commerce example. Why is nobody's talking about the AI impact on e-commerce, or specifically agentic AI or AI agents? There's going to be a stupid amount of products that are going to get released in the next 5-7 years due to people being AI agents to like, oh, find out what's niche is missing in the market, in this marketplace, help me orchestrate a plan to get from supply to end product and launch it, and create a marketing agent, like marketing department. Like you can create your own marketing department, sales department, all using AI agents. Like you just need a one-man shop anymore. So now, once you create these AI agents, like it's just going to snowball after that. Like it's going to create so many SMBs overnight. It's going to create so many more products overnight. And that's going to cause a ton of GMV growth on e-commerce companies. Mercado Libre will benefit of it. Yes. I don't know about Latin America as much, but the picks and shovels, the Shopifys, the Amazons, the Global E's, they're going to benefit substantially, especially Global E, because they're solving the complexity chain of e-commerce. So like if you're in the US, you're using AI agents, like you can create products and sell them overseas in Europe very easily using Global E. They're solving all the tax issues, currency issues. Like they solve everything for you. That's going to be a direct impact. SMBs, like I said, they're going to explode. Like it's going to explode like a significant amount in the post AI agent world. What's that going to do for DigitalOcean, the cloud computing provider for SMBs? Inference alone is going to cause a stupid amount of demand in their product. I added DigitalOcean this week. Like this is one name where like it doesn't make sense that they're not going to be growing 25-30% going forward. Like right now they're supposed to be growing 15%, but like it doesn't make sense in this like an AI agent world that we're going to be in, where there's going to be an explosion of SMBs. That's just going to cause like so many people to need cloud computing or inference. Like DigitalOcean should benefit off that. If they don't, I'm wrong. I'm wrong about this thing. That's it. I'm just wrong. So I'm not dropping DigitalOcean, but I think I'm like, it's one of those instances where like the opportunity is so big that even though they're not proving to me in the fundamentals, like I see them fitting this narrative that I'm giving them 12, maybe 18 months of a leeway. But if I don't see anything from them in like next 6 quarters, I'm wrong. But I'm giving them a leash, and either way, I added. So I think those are 2 examples that a lot of people aren't thinking about. But like, there's so many secular shifts that are occurring across multiple industries for AI. It's not just software. It's not just GPUs, hardware, servers. That you have to think about that. So that's why I'm going to try to highlight more companies going forward that like, oh, this is like a wonky way to capitalize on AI, and this is how type of thing.
Hell yeah. So there you have it. So let's do a quick and to get through some of these. So we got some good picks. MongoDB, as always, is just a quick glance at the chart, talking about whether or not it's time to go long. Primarily getting your fundamentals from him, text from me. I actually had this marked already, which means I do love it. I would take MongoDB at 205, 210 all day. All day.
I think, again, MongoDB fits in the DigitalOcean bucket for me. If they don't have a massive revenue reacceleration towards 25, 30% next 18 months, I'm wrong about their niche in the database ecosystem, which I could be, because like all the engineers I talk about, they don't like MongoDB. It's weird. Like all the technical people, like they don't like the MongoDB product. I think maybe Oracle can maybe eat some of their lunch, but I do believe a NoSQL future is an absolute necessity in a post-AI world. I think that there is a world where you can have so many different databases thrive, and I think modern AI applications will be using MongoDB going forward. It's like, I think I'm correct in this until I don't want to be eating the opportunity cost. Like this is where we're at in AI, guys. Like my thesis, if it's not backed by fundamentals, I have to give it a timeline. I can't just keep holding a stock and thinking I'm going to be right when they haven't proved it to me yet. It's like you have to be able to cut them down. So MongoDB is one, my polarizing ones where it's not going to be as big as Snowflake ever, but like I think it's really freaking cheap here. Especially, it's the cheapest valuation towards their ARR they've had in a while. So
it's a perfect transition then. Run on over to Snowflake. So again, remember we added this 110 easy money. Have your thoughts changed on this at all?
No, I mean I went on national TV and said Snowflake will hit $300 in the next 12 months. So
I think it's 308.
I stick my neck out there, but yeah.
There's your target right there, 308.12. We gave that to you when it was at 107. So again, scan that code, get those picks, get in there, baby. Crowd, not that many suggestions today, but it worked out because we ran a little long. We wanted to give you a little more in-depth today. I know there's a lot of fear and FUD in the market. We wanted to give you a little in-depth on some of the key picks here. For crowd, I mean, this chart is a little beat, if I'm being honest. I've been waiting for kind of a retrace, low 200s, maybe 250s. That's a great consolidation channel. That's where I'd be adding. Let's do this, Frank.
So here's a polarizing one. I don't think CrowdStrike's a stock to own in 2025, but it will be in 2026. I think this year is going to be a weird digestive year in the post outage, where there's going to be a lot of like outflows from contracts, fundamentals look a little wonky, and then we finally base all that headway's over and we launch. I'm not selling CrowdStrike, but this is.
I've never even heard of this one, Tempest AI.
It's a healthcare AI play.
Oh. Would you just, no other thoughts, smash or pass?
Oh, I think AI in general is going to catch a major bid in 25, so smash. Like I think it's just going to be a high tide result votes. And all
right, let's knock them out because I got to jump off here in a second. Vertiv Holdings, no idea what this is, never heard of it. You guys are always coming with these tickers I've never seen, but this chart is unbelievable. Definitely finding some sell side liquidity up there, so buyers aren't loving it beyond 128. But this is an interesting setup. Looks like Stocks Buddy gave you this one at $9. What a guy! Put that link in there if you want to get it. Every time I pull up a monthly chart, I'm like, why the hell don't I just only look at Stocks Buddy and just buy these? Goes on in my head all the time. Nailed it at 9. All right, final thoughts. The walk away. What's final thoughts?
So the walk away is 2025 will be the year where you have to be more long term than specific on performance, like in the media. Like there's gonna be a lot of short term noise. The theme of 2025 will be choppiness. It's going to be a choppy one, and I think we end up green, low to mid single digits, but it's going to be a volatile type of year. Stock pickers type of market where it's not going to be like indices are going to go up and every high tide result boats. It won't be that. You need to be able to be exposed to the hot pockets of the market in 2025. That's software. That's high quality small caps. That's the industries that are vulnerable to interest rates that maybe right now the market's pricing a 25 basis cut for the whole year. If we get to 75 or 100, those names in these vulnerable interest rate industries will catch major bids. Industrial, solar, EV, etc. So you need to be exposed to those kind of pockets. What's worked the past 2 years will not work, in my opinion, in 2025. It just won't. I think those winners, they had their moment in the sun. I think it's someone else's turn to enjoy that spotlight. NVIDIA will do just fine. NVIDIA is an outlier in this. ASML, TSM, same with them. But a lot of stage one winners, they might be duds this year. They might be in the middle of that S curve. That's not where you want your alpha to be. No. Software. It's the year of software. Everyone's going to have FOMO behavior come this summer on software. Position yourself ahead of time. High tide result boats. Everyone's going to say AI is going to be the biggest beneficiary of all software. That won't be the case long term, but in 2025, it's going to be a high tide result boats.
I couldn't agree more. I think that really focusing on the key players that are going to drive the quickest benefit from the change in the world. I mean, at the end of the day, that we've talked about a lot of these names. I would say that I echo the sentiments about being a stock picker this year is going to be more valuable than anything. I think there will not be meaningful returns outside of that unless you venture into riskier like crypto and stuff. Like personally, I'll be very honest with you. I'm newer to the meme culture and all that stuff, but like, dude, there's a maximum volatility there. I would say there are small caps. There are some huge opportunities in the market, and I suggest that you explore them all. But definitely follow the narratives, follow the individual picks. That's where you're going to crush it. And there you go. If you're into memes, check out Sad Boy. That's your ticket. All right. I love y'all. Well, some updates coming about the show. Almost hit 10,000 people. Next week, I expect 10,000 hits. We love y'all. I appreciate you being here. Tweet the tickers if you didn't get covered. We'll try to get through them. We appreciate you being here. We love you. Stay blessed. Bye-bye now.